what's going on, everybody? Welcome to another episode of Ron's Crypto Therapy. So this episode is going to be a really good episode. I'm going to go over some BTC market data that I've collected for a long time. I try to put out high IQ content on this channel, so some of it might be a little dry and boring. But if you want to know, what data you can use to say, okay, have we found the bottom yet, or what the bottom could be, I think that I have a lot of that info for you. But just real quick to touch on currently what's going on, basically just what we have said so far on here, going back several weeks, that my premise was that this was a falling wedge bull flag over here, and that's what you've seen play out. And I still think that, and if this weekly candle holds, then I think that we'll see this wedge play out, maybe get a double top here, and then I'd like to see us maybe trend down there. There was a lot of reasons to think that we were going to pull back to this level. I said it in both the last videos. This trend line, 200-day moving average, to make a nice wedge, all these kinds of things. And this head and shoulders, this bullish head and shoulders on the weekly, I don't care what anybody says. Bitcoin bulls are still going to try to make this play out. What is bearish here? Like people that trade off the weekly, which is big money, they had a big head and shoulders pattern, strong breakout, and you had follow through after the breakout. And a lot of exchanges, this candle's green as well. So you had the breakout, several follow through candles, and after that, this is more like a leg in a trading range, like bull, bear, bear, bull, bear. Like that's not indicative of starting a trend down. So I think down will still come, and we'll talk about that a lot in this video. But for right now, I still like this move as a falling wedge bull flag that's finding support off this trend line. I mean, this is a great candle right here. Wicks off this trend line just under the 200-day moving average. And now you have a long tail on the end, a green. I mean, this is a bullish reversal candle. That's what you want to see in this kind of situation. It's not a guarantee that we're going to go up. And just because it's a falling wedge bull flag also doesn't mean that you're definitely going up. It means that the probability of sideways to up is a lot more than down. So that's what I'm going off of. I know there's a lot of FUD out there and things like that, and I really try not to pay any attention to that. The other day when it dumped from that Binance news, honestly, I did not even know about it until later on that evening about Binance or whatever, and it didn't matter. It made no difference in what I was looking at on the chart. So anyway, we're going to go to the Bitcoin index chart that I keep. So this is the entire history of Bitcoin. I know when you look at it by exchange, if you're looking at like a Binance chart or whatever, a Coinbase only goes back a certain amount of time. This chart goes back to the inception of Bitcoin, and it's called the Bitcoin index chart if anybody wants to use it for anything. And you can see I have a lot of data up here, all kinds of things, and I keep this chart just like this with these data points that I collect. And I found a lot of interesting things. And one time when I bought the bottom recently, the 15K area, which if anybody doubts that, please go look at the receipts video that I made. And I was plenty of Twitter posts and things like that when I was saying, buy now. This is the time to buy. And I use some of this data for that. And some of the things that I look at here are, I have it all grouped as well. I look at a lot of time, gains, and accumulation. So we'll go over this real quick, but we're going to talk about this as we go through the chart. Things that I have tracked is the drops from the all-time high, the bear market rally gains, the drop from the bear market rally, the all-time high to the first bear market low, between bear market lows, all-time high to bear market high, the time for that, first bear market low to bear market high. So all these things are really important because, okay, we've made a first bear market low. Now we can use some of this previous market cycle data to see maybe where we're at now in this bear market rally that we've been experiencing. Bear market rally high to second low. This is something that we definitely want to look at right here because, okay, say we've had a high, and we're going to look at time data as well to go along with this. When can we expect that second low? And can we expect a second low? And another thing I have is accumulation distribution data. When it was at the lows and the highs, how long was it there? And that's important too. So you see right here, V-shaped. And we're going to talk about that as well. It's the only time in Bitcoin's history it had a major swing low, at least market cycle swing highs and lows that was V-shaped. And the reason that's important to me, I think, is because whenever it hits one of these lows or highs, you have plenty of time. You have plenty of time to buy or sell because it stays there normally for 4 or 5 weeks. And that's how the markets are kind of supposed to work. It's distributing and it's accumulating. And I said during the time when we were at 16K, if you looked at the volume on Binance and Coinbase as well, it was the biggest volume in the history of Bitcoin. And where all you hear is like bearish news on Twitter and stuff like that, that was retail selling the bottom and these big entities bagging it up. And it was obvious right there on the chart with the volume. Because if you're getting a high volume, even if the bars aren't big, it means that there's a ton of orders taking place, especially if the bars aren't big. If the bars are small and the volume's big, then that means there's a whole lot of buying and selling taking place in that session. And if the price doesn't move much, then that means it's a whole lot of changing hands. And it wasn't retail that was buying it then. But anyway, not to get too far off topic. So, I have this going back all the way, this is the 2013 market cycle, and you see a lot of similarities. And it's not that it rhymes 100%, but history often, or not that it repeats 100%, but history often rhymes, if not repeats. So, some of these things going back really far to like 2011, that maybe the data isn't quite as accurate, but if I could pull a data point out of it for the things that I'm tracking, then I did. And some of the things that you tend to see with Bitcoin is that whether it's a bull or bear cycle, you normally get either a double bottom or double top or two pushes up in the market cycle. The only time you didn't get that was 2017. You just had a straight parabolic run up. But I think that correlates to other data points that you see. And this is going back to the 2013 market cycle. It wasn't a double top necessarily. You got a higher high. You got another high. And then the bear market data, you had a double bottom, which is right here, a nice wiki. And this is a weekly chart. A nice wiki double bottom. That was 217 days in between those bottoms. And in between that was an 84% gain. And the days of accumulation, after the bottoms as well. And I think this is important to look at, and we're gonna look at it on that spreadsheet and how it correlates to currently. But I think that the last one is even more important. The 2017 cycle going into the 2019 bear market rally. I think that those are some important data points in there. And like I said, here you didn't get a double. It was just like a parabolic. This is like an outlier, 12,000% gain damn near from the market cycle bottom. And this was definitely an outlier. Like Bitcoin's not going to see those kind of gains before because of market cap and factors like that. But anyway, so we have the drops from the highs, the distance between the highs and the first low and the second low, and things like that. And something that I think is really important about this market cycle here, and this is why I think that it can relate to the current times. People talk about the COVID low a lot. You always hear this COVID low, the COVID low, whatever. In the bear market cycle, or in the off the bull market cycle, if you want to call it that, the COVID low was not the low. It was a higher low. So Bitcoin still double bottomed. This was one low, and then you say the COVID low was the double bottom. It's not as nice and neat of a double bottom as we got over here, but nonetheless, it is a higher low double bottom. And I think that's important because I feel like right now everyone's scared of bad news, and this was pretty bad news too, especially at the time, worldwide pandemic, and people didn't know what to expect or how serious it was going to be. And you obviously saw markets all over the world reacting to it. But even with that bearish sentiment, it was still not enough to make a new low. And so that was about 4,000. The low was like just over 3,000. I mean, you were still like 20% off of making a new low with that really bad news. And we're going to talk about this a little bit later, but I think that if somebody put a gun to my head and asked me what's the most likely scenario, I think a higher low double bottom similar to this, that's catalyst to some kind of bad news event like the COVID low. But we'll see, and we'll talk about some scenarios. But we're going to look at the distance between the bottoms and from the bear market high to the next bottom, because I think those are the two most important things. Now, when I bought the first bottom, some things that I looked at were the previous market cycle's all-time high to the first low. And if I'm not mistaken, yeah, and if we come over here and look, the 2017 market cycle, after the all-time high to the first low in the bear market, it was 357 days. The first time it was 400 days, not too far off from this time. And this time, from this last time, what we just saw, it was 364 days, a week difference from there. And I'm getting these numbers based off a weekly chart, so they're going to be in those kind of increments. It may not be accurate to the actual day because I'm looking at a weekly chart. But still very, very close there, and almost exactly a year to the day from the all-time high from last market cycle till we got that first low. And that correlates with what we've seen in the past. You know, like I said, it may not repeat exactly, but it'll rhyme, and it almost repeated exactly from 2017. And I absolutely looked at this data during that time when I was deciding if it was a good time, if we were seeing the low or not. So, but anyway, the main thing we want to look at is what's going on now, right? You know, this is, you know, what about now? You know, from the highs and the lows and all these things we're talking about. And I also got these fractals over here to talk about. You know, on Twitter, January 21st, I said, all right, you know, basically, here we go. Bear market rally is bear market rally time, because every single, just about every Bitcoin cycle, bull or bear, will have a strong counter trend in that cycle. And that's what these double bottoms are that I'm talking about in bear market rallies. And even, you know, this last bull market cycle, you had an all-time high, then you had a good counter trend cycle in between, and then the bear market continued, or the bull market continued, excuse me. And, you know, looking back, this doesn't look like much now, but trust me, at the time it was. I mean, I remember there was all kinds of stuff people were talking about during this this move down and this time here. But it was just indicative of what Bitcoin normally does, where it has a strong counter trend cycle within the main cycle. So if it's a bull cycle, normally within that bull cycle there will be a counter trend cycle, and the drops are pretty consistent. I have that data in here. Drop from all-time high, you know, and I believe I have it for bull and bear market as well. I know it's written here on the chart. But in any event, you know, if we would have mimicked the 2019 rally, you know, it depends on what you say, took this fractal where the breakout is, then that would have put us right at about 50,000 and making a double top over here with this swing high. It's not that that's impossible, but I think this late in the game that's a little improbable. But that's what was potentially on the table if we mimicked the previous market cycle. Now the gains from bear market rally, if you look at the 2015 cycle, we got 84%, 2019 330%, and so far the high was 100%. So it lines up a little more with the 84%. And my thesis on this, so the bear market rally here, where we had the 84% bear market rally gain, and it was 200 days, about 217 days in between the two lows and more accumulation. That bull market that followed was the one that was crazy parabolic. Here, where you had a really strong bear market rally, the gains on the following bull market were not as big as what we've been accustomed to seeing in the past, and the market cap's bigger, so some of that's expected. But I feel that this correlates here, that if you have a really, really parabolic bear market rally, it gives you less time for accumulation for the bull market, and I think it makes for a weaker bull market. One thing that I think is important here when we look at the accumulation data at lows, you know, like I said earlier, it stays here for a while. And here you got the V shape from the COVID recovery. So you didn't get the accumulation leading into that. It was a V-shaped recovery. That's the only time it was a major swing high or low. You didn't have a lot of time to accumulate or distribute. And if we get a higher low double bottom, that I think is probably, like, if I had to say the most likely scenario, I think it'll be V-shaped. I think it'll be a wick. I don't think it's going to be like that. So I don't think that we're going to mimic either one of these previous market cycles, apples to apples. I think that there will be characteristics from both of them that combine, and you can kind of get an idea of some things to expect based off of those. So, big question is, have we seen the bottom? Um, or what will the new bottom be? So, we've got our first bottom. I think everyone can agree on that, whether you think 10K Bitcoin's coming or whatever. Then this was a bottom, and we've rallied 100%. I don't know how anyone can argue that this is still part of a down move for a first low in the market cycle. This is the low. Now, since that, so I had it written up here earlier. I thought it was it's like 200 days. I could have swore I had it up here. Okay, I do. It's just up at the top. From the first low, yep, from the first low to the current high was 140 days. So we were at total from the low, say we call the low here on this candle. I think it was actually this candle that made the lowest price to currently. We're at 200 and a little over 200 days. All right, and this is the 100% gain that we've seen from this low to that. So we're at 200 days so far from the first low. So we want to go back to look at the previous market cycle. Between bear market lows. All right, so we have 2013 was 217 days, 2017 was 452 days. So are we going to mimic more this or this? Well, given we're already at 203 days, probably we're leaning more towards that, somewhere over a year. And now I think that this one is also important from the 2019 rally, because we had that V-shaped recovery, and it was just before the halving. It was not long before the halving when all that happened, and it just shows you in crypto, you know, your back can really be pushed up to the wall, and you really think that something's not going to happen. I mean, at the time, you know, you're not too far out from the halving, and now we're seeing super low prices. So it makes you, you know, looking back in time, it seems obvious why didn't people buy the COVID low. Trust me, there was a reasons not to buy at the time. It was a tough call for people, but anyway. So based off of that, say we did get something, you know, 450 days or something like that, what would that look like? All right, that's, you know, 450 days right there, and that puts us out in February 24. Well, the halving's not till April of 24. And you know, I'm going off the premise that we're going to rally at the halving, and that's not a guarantee that that's going to happen either. You know, this isn't financial advice, but that's what we've done every time in the past, and it's not like it's arbitrary. The the Bitcoin supply is lower going forward, so there's a reason for it. Now, I do think this could be the last time that we see that matter, because it's going to go from 6.25 Bitcoin to 3.125. But after that, it's going to go from 3.125 to, you know, 1 point whatever. And at that point, you're dropping 1 Bitcoin per block. And, you know, unless the price of Bitcoin's a whole lot at the time, when that materializes, then I don't think it's possible that it may not spark a rally based off of the supply anymore. It still could, because that's what people think. But I still think, based off everything, that we should still see a rally at the halving this time. And that's the premise I'm gonna go off of. So if that happens 450 days out, like the 2019 bear market, and leading into the next bull market, you know, that puts us 2 months before the halving, which was similar to what happened last time. And if you look, that's still a ways out. That's still a long ways out. We're here. That's still 200 days. We're like halfway there if that was the case. Now, will it happen right there? I would be shocked if it was the exact same, but I would not be shocked if it was somewhere in the neighborhood of that same time, like, you know, 400 days or something like that. And that just shows you that we would still have about 6 months to go. And I said on Danny the Bull's live stream maybe 2 months ago that I thought, based off the previous market cycles, that it was either 5 to 9 months out where you could see that low. And that is kind of a big range, saying 5 to 9 months. But at that time, I'm like, which market cycle are we going to more mimic? Is it going to be the 2015 or 2019? And it's definitely looking more like 2019 to me. Doesn't mean that the data is irrelevant from 2017 or even 2013. But anyway, so that's one important data point to look at, in my opinion, the time from the previous low. And now another one is the bear market high to the second low. And okay, well, I saw the first bear market low to bear market high. Let's look at that really quick as well. All right, 2015, it was lesser between the double top, 56 days, like 2 months. Last time, 2019, we were at 200 days. Currently, for the current high was 140 days, but where we're at overall is like 203 days. But we made the high over here a few weeks ago. So um, that means I think that kind of plays out with the current, what we think could happen. If we get this wedge plays out, we could get another push up. If it made a higher high, and that's a big if, then that could line up exactly. That could line up pretty close with 2019. If we get a lower high, then it would still stay at 140, and that still gives us, we're in the range. And that's why I don't foresee at this point a push up to 50,000. I do think higher prices can come into this head and shoulders, that they're going to try to make that play out. But I don't know that we're going to reach up to this swing high now. It was a lot more probable than what people thought, because this candle over here, I mean, it takes out this big candle, the main candle, and then you got to close on the follow through that the body closed over this main candle. And I've said that this structure is not real structure on the weekly. On the daily, it is. On the daily, it's a swing high. But generally, the higher the time frame, the bigger the money, and if a lot of big money's on the weekly, then that's not a real pronounced swing high in the market, which in a way you could look at it has already been taken out with the close above the body, but we haven't taken out the wicks. But in any event, the other thing I was talking about was the bear market high to the next low. All right, bear market rally high to the second low. All right, and remember when I said the previous market cycle, there is some data you can pull out of there. And I found it interesting that in 2011, 2015, it was exactly, because you've seen that a few times with Bitcoin. We just talked about it with the bear market high to the first low. That was almost the exact same from a previous market cycle. So we've seen these things rhyme very close before. So 2019, 256 days between the bear market high and the second low. So we want to see where we're at now. We're calling this the bear market high to where we are currently, 63 days. So even if we were to match up with the previous market cycles, we still have a ways to go for that double bottom. So definitely keep that in mind. A lot of things can happen. I mean, just because I think lower prices will come, I think higher prices will come first, or at least somewhat of a leg up, an attempt to push up, an attempt for this wedge bull flag, an attempt for this head and shoulders. There's reasons to think that we'll get a push up, but ultimately I do think that we will get another push down. Now, an interesting theory a good friend of mine came up with. I do a lot of this with a good friend of mine in real life named Eric, and we make a really good team because he doesn't look at the same things that I look at. He looks at things totally different, to be quite honest, but he's been very successful on his own as well. And I think it's good that we bounce different viewpoints off of each other. And he actually doesn't think it's going to go below 25. He's said this for weeks now. He said he didn't think it was going to go back under 25, and he thinks that he agrees with the double bottom, but he thinks that it's possible this right here was the double bottom, that this low right here at like 17K and then here. And you know what, he might be right. I'm still going to stick with that. We'll get another low. This whole time, and I said this to a lot of people, a whole time when we were in here, I said I think this is going to be a falling wedge that we break out of to kind of get out of the bear market low, and that you get maybe we get a retest back down in that area for some kind of double bottom. And you know, we'll have to see what happens in the meantime. But if we get, say we get a leg up, we kind of go, and this is on a weekly time frame, you know, so like say this wedge plays out something like this, and we get a double top, and then we start to trend down, you know. I mean, you see how this thing would likely play out down to here where we have that previous market cycle data low. I mean, you get where I'm going with it. Like if you project it out on a chart, if this wedge can play out decently, then I think that that this could line up. That this could all be, you know, similar to the market cycle data that we're talking about here. We're looking at the previous low to projecting out the low, and if we look at the bear market high, see if we get any confluence here, high to the second low. Let's see if let's do 260 days out and see what that looks like. So we're calling the high here 260 days out, right there. You see both those data points line up pretty well with each other from the 2019 market cycle to give you some kind of zone. And this isn't the price I'm talking about, just the time frame. You know, somewhere in this little window at the end of 2023, beginning of 2024, that maybe that's when we could see that. Now, if we went off the other market cycle data, let's say 160 days, and we'll see what that looks like in confluence also between the lows. So I know this from looking at it, between the lows, sorry, bear with me just a second. Between bear market lows, so 217 days for that one. So let's look at what the 217 days would look like from the first low, which that would be just a little bit past where we are now. Yeah. So yeah, 217 days. So for if we were mimicking the other market cycle, then the low would be like somewhere soon. Like, you know, you're probably talking about, if you try to take some confluence between the two, somewhere between now and September. And that could happen if we start trending down now. But I think that here is more likely. So that does put in line with kind of what I said on Danny the Bull's live stream like 2 months ago of the window on when we could see the next low in the market. I think that it's probably either going to be in September, which if it mimics more like the 2013 cycle, and September is historically a bad month for Bitcoin, so that adds a little bit of confluence there as well. Or it could be the end of the year, late December, early January, if it's more like the 2019 cycle. But, you know, it could be kind of a mixture of the two. So I would say anytime between September to January, that I would expect to see some bearish stuff probably in there, and sometime in that time frame is when you could see the low if that happens. And some points that I want to make about this for the low, and I know a lot of people are calling for really low numbers, the 10K, 12K still, and some reasons I don't see that are, I can tell you for a fact, bulls are going to defend this point right here. It doesn't mean that they'll be able to, depending on what's going on, but this FTX breakout point at 20K, just say 20K. Bulls are going to defend that point. It's a really strong level for Bitcoin. For one, if I was to put a volume profile up here, you would see how much price action has happened there. It's a strong level. Now, what I could see is like we get a push through that and then a wick up to where you get like something like here, 18.3 or something like that, maybe off that wick there, fill that gap. That's right at 18.3, and then it closes as a wick on the weekly. I could see that as being likely, and that we don't actually close below this. Now, if you close below this, we'll have to see. I really felt that if we were going to push down to low levels, that the time to do that was at the end of the year last year, because so I talk about gaps in videos a lot. You had this gap here. This was target number 1 at 13.7, or yeah, thereabouts, 13.8. And then there's another gap here are here, 12.4, and then you got the one here around 10K. So given that we didn't even get like a gap fill at all, so it would have to take this gap out, take this gap out, and then hit 10K. I just think there's a lot that has to happen. And I mean, bearish news can definitely come, but I kind of feel the most bearish card they had to play was US regulation. And, anything can happen for sure with some of these alts and stuff like that. But, as far as I understand it, Bitcoin really isn't at risk for any kind of US regulation. It's already been deemed a commodity. So I'm not as worried about that. And even with that bearish news that came out recently, it didn't even take the market down that much. Gary Gensler, there's a lot of pressure on him from Congress. He could be outed any day, potentially. I mean, he could not, but he could. I'm sure people saw the BlackRock ETF. And that's another thing my buddy Eric talks about. He's more worried about bullish news and not being positioned than he is about bearish news. And he's talking about the ETF. He's like, if the ETF gets approved, and this is before the BlackRock thing just happened, he's like, you can see the biggest Bitcoin green candle of your life. And it's not going to go backwards after that. And I mean, that could happen, who knows when that'll happen. But, there's bullish and bearish news to think about or be worried about, if you want to call it that. Unless we see, World War III type of stuff happening, then I don't foresee it going back, making a new low. It certainly can. Anything's possible. But 20K is a really strong level on Bitcoin. I know bulls are going to defend this breakout point right here. So all these things considered, that's why I just think a higher low, double bottom, and it could even double bottom with this wick here at about 20K. So that's what I think the most likely scenario is. Like I said, my buddy, he thinks that it could have double bottomed here. I don't really see it like that. But one thing to keep in mind, instead of being so obsessed with catching the bottom, don't miss out on the easy opportunity that's right there in front of you. I tell people this a lot. So this isn't anything exact scientific right here, but if you just bought Bitcoin throughout this whole bear market, say you probably got an average price somewhere or like here. I think that's a fair, like I said, it's not anything mathematical, scientific, but if you just bought $100 worth of Bitcoin every week throughout this market cycle and did not worry about the balance, then I think that you would got an average price somewhere around here. I think that's anybody watching still can say that's a fair projection. So that's an average price of 7,000. So you would have, assuming you sold the top, you would have 10 extra money with no stress, not even worrying about it at all. Because when you look back, this chart's in a logarithmic form, but if it wasn't, this would just look like a flat line down here. And don't let the train leave and you have no bags packed at all. Because I'm somebody who's bought a lot of highs and a lot of lows. I prove that with my videos. People that know me on Telegram, I sold the all-time high. Even when it got here, I was on John's Crypto Therapy channel saying that this was a fake breakout. I bought the low. I sold the high recently. I bought this low. I'm somebody who's bought a lot of lows and highs and has the screenshots to prove it. And I don't think I'm smarter than the market to time every single bottom to put all my eggs in that basket. So over the next year, it's less than a year to the halving, I'm going to DCA Bitcoin at various prices and other alts as well. I'm not saving all my funds to try to bag up at the bottom. Now I am saving funds and I'm trading along the way, but I just wanted to point this out that don't trying to hit a home run, don't miss the easy win that's in front of you. Assuming that Bitcoin is going to rally at the halving again. And like I just pointed out, I sold these. This is the one I was talking about on John's Crypto Therapy. I think it might have been here. Yeah, it's when it was this fake breakout here. Yeah, I said this was a fake breakout, and to short it, and sold most all my crypto. And then as it came down here, I sold, and then bought it back here lower. And it's not financial advice. At the end of the day, I don't think I'm any kind of market savant or anything like that. I think what I do well is I don't pay attention to the news, and I try to go off just what I'm seeing on the chart. And I don't think I'm the best trader in the world. However, I don't see how anyone can dispute the results that I've had in the crypto market over the last several years. You know, I have called these highs and lows on the money several times now, and I use a lot of this data here to look at that. So anybody that was that tuned in to the end of the video, I appreciate you tuning in to the end, and I hope that everybody got something out of it and that it wasn't too long and drawn out and dry. And yeah, I'll try to put an OMI video out tomorrow or this upcoming week if I have time. Thanks everybody. Later.